Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. The U.S. and Iran have agreed to a 2-week ceasefire, and Tehran has pledged to reopen the Strait of Hormuz. Ship owners are now rushing to understand the terms of the deal to provide an exit window for the more than 800 ships trapped in the Gulf. Iran has agreed to safe passage in coordination with its armed forces and within technical limitation. While U.S. President Donald Trump says the U.S. will be helping with the traffic buildup. Shares of Algoma Steel are getting a lift, up about 2% right now. The steel producer has entered a joint venture with Rochelle to create Rochelle Algoma Defense Solutions. Rochelle is an Ontario-based defense manufacturer of smart armored vehicles. The goal is to manufacture ballistic steel for armored vehicles for Canada's defense industry. Companies say that the steel can also be used for other industries, including infrastructure, marine, aerospace, and security. Shares of Keyera are under pressure today. The Competition Bureau will advance its investigation into the company's proposed acquisition of the Canadian natural gas liquids business of Plains All-American Pipeline. Both Keyera and Plains have significant midstream oil and gas operations in Canada, and the watchdog is looking into whether the deal will result in a lessening or prevention of competition in Canada's oil and gas industry. The Bureau is also investigating whether the transaction raises barriers for competitors and new market entrants. And taking a look at the markets, they've softened up a little bit. They're still up for the day. From the news, of course, on the 2-week truce in Iran. You can see the TSX up by a little more than a percentage point. Leading the way is tech and materials. Tech's up more than 4 points, and materials almost 3 points. Going the other way, energy off by nearly 3 percentage points right now. South of the border, similar situation. Everybody happy down there with that news last night, and all the markets reacting almost the same. S&P 500 up by 2.15, the Dow by 2.3, and the Nasdaq by nearly 2.6. Okay, along with the surging markets, oil is seeing its biggest plunge in 6 years on the news that the U.S. and Iran have a 2-week ceasefire deal. It was reached last night. Let's get more now from Kelsey Keane, Director of Equity Capital Markets at the National Bank of Canada. Kelsey, thank you as always for joining us.
Yeah, good
coming
to be
in
here.
The studio. It's always nice to see people in the studio. Initial reaction to the news last night that we weren't sure what might happen last night. It was either Armageddon or peace, and so right now
exactly.
We're getting peace.
At close of markets last night, we didn't really know what to expect at open today. Obviously, we saw a de-escalation of the conflict, and moving towards a resolution here. So on the back of that, we saw a broad market rally, and as expected, we saw energy stocks and the price of oil come down. And
we're seeing that now. Is this I guess an expected reaction, and is this the proper reaction?
I think markets are very hypersensitive right now. So the reaction to any news event that happens in markets, we're going to see kind of some drastic swings. I think if we're looking towards a world where the outlook is more positive, so we're seeing an end to this conflict, we're looking at stronger global growth, fears of inflation are reduced, we're looking at central banks potentially easing policies when we were looking at the Fed maybe hiking in the face of inflation. So all of that provides support across most sectors in equity markets.
And what should we be looking for? I mean, obviously the volatility is still here. This isn't suddenly magically going away and the markets are going to go up 20% in the next two. Or maybe they will. Who knows? I wouldn't complain if they did.
Yeah.
But what are you looking for over the next couple of weeks with this truce?
Yeah, so I think we're going to want to see some progress towards, when is there an actual end date? We have a ceasefire. We have 2 weeks. Hopefully there's more discussions and negotiations that go in a more positive direction. I think if they don't, I think we can be looking at potentially a worse outcome because markets are really craving any positive news right now, as we saw today, or we're seeing today. So we have to be, it's going to be hypersensitive.
And where are you focusing? What are you looking at right now with everything that's unfolding?
Yeah, so I think with this positive news, we're seeing a real rotation into growth over defensive names. So we're seeing a rally in tech and also cyclical industries, so consumer discretionary. There have been some sectors of the market that have proven to be more resilient amid all the conflict. So when we think of defensive names, like those that have more military spending.
And what kind of an impact does, because I mean, oil, it's dropped. We've seen it drop. I think it's down about 20% right now. I hate giving a number because that was about 10 or 15 minutes ago. And so it's probably changed since then. But it's around 19-20%, I think is enough. If oil continues to drop, will we see it? Does it feel like we'll see it return to what it was before, down to 50 or 60, around $60 a barrel? Or is this something that's going to stay elevated? And what kind of an impact do you see that happening on different industries? Yeah,
so I think we saw the initial reaction today. I think we are going to see it maybe temper out for a bit until there is actually a resolution.
So it's a kind of sit and wait.
Sit and wait.
And then with the banks, with this, central banks, we had... Oops, that would be my phone ringing for the first time ever on air. I didn't turn it off. It had to happen.
Problem.
6 months in, it finally happened. I didn't turn the alarm. I didn't turn the ringer off. Okay, where were we? All right, that's
central banks.
Central banks. Bank of Canada. We had looked and we thought there was the possibility might have seen a cut. Then it changed, so we might see rate hikes. Yeah. Where are they now? What do you see them doing?
Yeah, so the market's pricing in still around one hike by the end of the year for the Central Bank of Canada. In the U.S., we're seeing some of those fears of a hike this year come off a little bit, and it may go to a more hold or potentially even a cut scenario.
And what would it take to change any of that right now, or is it pretty big?
I think we're going to have to watch.
A couple of months ago, everything else was pretty baked in.
I think we're really going to have to watch the price of oil and the impacts of inflation on what oil can do.
And with inflation, how are you looking at that right now?
So I think if we see an end to this conflict, we see energy prices mellow out. I think it was only a short-term impact to having those energy price or oil prices, at 120, 140. So if those stable out, then I think that impact of spiked inflation is only short-lived, and we can go to a more stable state.
And before all this, one of the things that we were talking about was the big IPOs.
Yes.
And they're kind of sneaking back in now. Yeah. What kind of an impact is all this having on the IPOs, like SpaceX and other potentials, OpenAI?
Yeah, so SpaceX did announce, or we had heard that they're coming in June. So that's a mega cap IPO. That is, a market-moving event that could, in itself, cause a lot of volatility in the market when we're thinking about index inclusion. And I think if that goes forward, what it really does, it does create a lot of optimism. Mm-hmm. Here in Canada, there was 2 IPOs already announced and filed and trading this year. We have seen a little bit of pause, but we do know that the pipeline is growing. So there are companies that are looking to list. Obviously, that is market dependent. So they want to be listing in an environment, where volatility is more stable, when you don't know day to day what's going to happen. So again, should we see more stability here, I think we could see a lot more companies come to market in Canada as well. Okay,
and with SpaceX, you say volatility, good volatility, bad volatility, or just who knows?
I think it's good volatility. And when I say that, I just mean it's such a large company coming on.
And it's Elon Musk.
So we're talking 50 to 75 billion offering size, 1.75 trillion valuation. That's huge. Mm-hmm. That's a lot of capital flowing into markets all at once. When you think about all the indexes that would need to hold the name, there's a lot of trading that happens on the back of that. So there is volatility on that.
Where would you see money drawn from for that?
Yeah, so I think...
Or would it be across the board?
It would be across the board. And I think particularly in Canada, you could see 2 things happen. So you could see capital flow into the U.S. on the back of that, but you could also see some optimism for similar like names in Canada, so more defense names, get kind of a light on the back of that.
Okay, we got to wrap it up there, Kelsey, but always thank you for joining us.
Yes.
Always appreciated. That was Kelsey Keane, Director of Equity Capital Markets at the National Bank of Canada. Coming up, the U.S. and Iran have agreed to a 2-week ceasefire deal that will include the reopening of the Strait of Hormuz under the coordination of Iranian armed forces. We'll get more on that after the break. Markets are higher this morning as oil and gas prices slide after the U.S. and Iran reached a two-week ceasefire that reopens the Strait of Hormuz, diffusing a standoff after President Trump issued a hard deadline to strike a deal. We get more from Andrew Peak, the director at Atlantic Council's Scowcroft Center and former senior official in both Trump administrations.
What happens in Lebanon if the ceasefire applies to Lebanon? What happens to the control of the Strait of Hormuz? Does Iran get to charge money on ships going through there? The practical effect of the war has been to lower the political cost on Iran of enforcing its military control of the strait. I mean, Iran, because of its geography, always has a latent control of the Strait of Hormuz. But ordinarily, if they shot at ships trying to transit it, they'd bear a tremendous political and potentially military cost. I think the ceasefire can work for the U.S. in this respect because it has temporarily now re-raised the political cost for Iran of breaking the ceasefire. If you have merchant ships try to pass without paying Iran, especially if they're escorted by U.S. or allied ships, this would put Iran in the place of essentially breaking the ceasefire and even challenging U.S. naval vessels.
So is this a major victory for Iran then, in that sense?
I'm going to have to give you the really unsatisfying answer of it's too early to tell. There's so much that's unadjudicated in the two different competing claims about the diplomacy. You have President Trump this morning referencing the 15 points the U.S. transmitted as the basis of negotiations. Yesterday, it was Iran's 10-point proposal. There's so much unknown right now, but I will say I've always thought that the U.S. could walk away and still call this a victory because of its degradation of Iran's military threat, i.e. basically take the approach that Israel takes to Lebanon and say, okay, we set Hezbollah back 5 years, and that's now a victory. We could take that approach with Iran and say we've diminished their capabilities and reduced their threat to the region. They no longer have clear control of the Strait of Hormuz. And so now we're good with that and let Iran dig itself out of its own hole. So I think even though the diplomacy is very unclear, I think you still could call that a win.
That's it. That is interesting. We've certainly learned, though, that with pretty low-tech weapons, fairly relatively cheap weapons, Iran has been able to shut this crucial waterway.
Yeah, absolutely. I think the risk tolerance for merchant shipping was much lower than we probably thought. That even if there was a chance that Iran, with very cheap weapons, as you say, what we would call asymmetric weapons, low-cost, high-yield weapons, could inflict damage to them, that they would then shy away from transiting the strait. I think what we found with Iran in the first term was that even when our allies, the Europeans and in the Gulf, weren't overjoyed about what we were doing with Iran, our Iran policy, like withdrawing from the Iranian nuclear deal, that Iran's behavior, its missiles, its proxies, would eventually push them onto our side, even if they didn't want to start out there. So how that applies here is, I would suspect that the permanent Iranian control of the Strait of Hormuz, especially if they have to start enforcing it by firing missiles, is so anathema to states, the region, and other states in Asia and Europe, that there will be more of an international effort to establish a fait accompli of free passage of the strait and not let Iran just grip it.
Right. And a point you're making is that if ships start going through without getting agreement or paying a pound of flesh to Iran, the Iranians go after them, they would be in the position of breaking the ceasefire and or having to actually get into tangles with navies of G7 countries and other U.S. allies.
Exactly. So the situation is actually better than it was 48 hours ago for the U.S. because that additional political and military cost is now on Iran. We'll see if it lasts, for the next 2 weeks.
President Trump saying that he has achieved, quote, regime change in Iran, which seems pretty obviously off base here.
Well, I think going by the Venezuela example, you can go through a few iterations of leadership and cause the regime to rethink some of what they are willing to settle for in diplomacy. So I think there are versions of regime change that we can talk about that have proved successful in South America that we can now look at in Iran. What I would really be looking at is how Iran's negotiating position has changed from where it was, a month or two ago. Historically, they've never been willing to talk about missiles. They've never been willing to talk about proxies in a diplomatic setting with us. They've never budged on any kind of uranium enrichment issue. If they start to talk about those things in a tactile way, in a way where it involves putting positions on paper that are less maximalist than their original positions, then I think you could have a legitimate argument saying, okay, there's a new leadership in Iran that is equally committed to regime survival, but thus is willing to play a little bit more ball on the diplomacy.
Iran and Russia have been working together. Russia, for example, using Iranian drones in its war in Ukraine. How does Russia fit into this? Is Putin, obviously Vladimir Putin was happy to see higher oil prices.
That's right. And that's where Russia and China, though they are strategically allied, their interests in the Middle East differ. China would very much like lower oil prices, and Russia, of course, as an oil producer and exporter, would like higher prices. Russia has suffered a series of setbacks in the Middle East since 2015. It's kind of apogee when it helped Assad stay in power and turn the tide of its civil war. Of course, the loss of Syria, the loss of the Assad regime was a huge hit for them, as well as the attack last year, the U.S. attack on Iran's nuclear facilities. Both of these are either friendly with Russia or former client states, as Syria was. So Russia would very much like to be back in the Middle East business. They would also like to establish a little horizontal leverage with the U.S. to balance out what's happening in Ukraine and the support that we're giving the Ukrainians, both the military and economic support, and also especially the intelligence support. The more leverage they can develop in Iran through providing capabilities and awareness, through various mechanisms to the Iranians, the more they might be willing to trade elsewhere. Just like Trump, they have a very good sense of where the leverage is.
We're almost out of time. You use the expression horizontal leverage. What does that mean?
Expanding negotiations, expanding the settlement for Ukraine into adjacent issues, right? Ukraine's their top priority, but if they can envision a settlement where there's certain Ukrainian issues that maybe are linked to certain Middle Eastern issues that are linked to issues elsewhere, I think that's something they would be interested in discussing.
Andrew Peak is director at the Atlantic Council Scowcroft Center and former senior official in both Trump administrations. Coming up, today's market drivers with Bloomberg's Monique Molina. Time now to take a look at today's market movers. We're joined by Bloomberg Equities reporter Monique Molina. Monique, thanks as always for joining us. Exxon, 6% of its global output because of the war. Wow.
Yeah, it was quite a large impact they're expecting to see that they announced today. They have some joint facilities in Qatar that were impacted by strikes in the Middle East from the war. So they're going to see the decline in production from that. They also are going to see some impact to earnings from their hedging. They had some derivatives hedged on commodity prices, and with the large rise we saw in prices in the first quarter, they did take some losses on that. So they're expecting to see lower earnings, potentially over 90 cents per share of impact for the first quarter. And that's what's really causing their shares to go lower today. Analysts are pretty negative on the update, saying that it was worse than expected and that these impacts are going to potentially be more long-lasting with the facilities that were damaged in Qatar. So Exxon is reporting earnings on May 1st, but they were just giving some guidance today. They're also lower with some of the other energy stocks as we've seen oil prices pull back, which is also expected to potentially weigh on earnings going forward.
Have we heard from any competitors on the impact for them yet?
So there have been some other firms that have announced that they had some hedging positions as well, that they have taken losses on. But we haven't seen their largest competitor, Chevron, yet make an announcement. So we'll see. Chevron's also reporting on May 1st. So we'll see whether they make an announcement before then or if they have any impacts if they announce that at their earnings.
All right. And the airlines, I'm sure, glad to hear about the news yesterday. Delta, though, it's actually doing okay.
Yes, Delta is doing quite well today. They reported their first quarter earnings this morning, and they beat on profit and revenue for the quarter. So that's what's helping their shares. They also said that they continue to see high demand, which is something that analysts had really been looking for. The company did say they're going to see some impacts from higher fuel prices through June of this year. But with the ceasefire now reached between the U.S. and Iran, there's hopes that that is going to bring an end to the war. And with that, we've seen oil prices fall as much as 17% today. And that's really helping some of these airline companies. And analysts are now saying that maybe the impacts that Delta is going to see from fuel prices aren't going to be as bad as feared. And maybe their guidance is actually more conservative.
Okay. And Mosaic doing some shifting around and changes, some big changes.
Yes, so Mosaic announced that they are going to be idling 2 of their facilities in Brazil. These are facilities that produce phosphate, and they're also laying off some of the employees at those facilities as a result. The company said that they are looking to potentially sell some of these assets. And while this is expected to have an about $400 million hit in terms of the lower phosphate production, this is going to lower their expenses, and they could also potentially see some funds if they are able to sell those assets. Mosaic shares are lower today with some of the other fertilizer names on the ceasefire, but they're actually outperforming some of their peers due to this news.
Okay, and let's take a look at a couple of sectors. I imagine they might be going in different directions right now. Gold and energy.
Yes, so the gold stocks, they are higher today. Gold prices rose as much as 3% on news of a ceasefire. We've seen gold pressured during the war because the U.S. dollar has been stronger, which makes gold more expensive, and also with rising energy costs that risk higher inflation, and gold does better in lower interest rate environments. So on the news of the ceasefire, we've seen gold go higher and pull up to those mining stocks with it today. On the opposite end, energy stocks are lower on the ceasefire. We saw energy fall as much, crude oil fall as much as 17%. And that's because a lot of energy supply out of the Middle East has been constrained due to the war and due to the closing of the Strait of Hormuz. So the thought is that if the Strait of Hormuz opens back up, if all the energy production comes back into effect, then there'll be less demand for some of these North American producers. And that's why we're seeing some of those energy shares lower.
All right, we'll wrap it up there, Monique. But thank you, as always, Bloomberg's Monique Malima. Up next, as trade diversification efforts continue, we look at the potential for Canada and Latin America. Shares of Blackline Safety are surging today. That after the Alberta-based company agreed to be taken private by investment firm Francisco Partners. The deal is worth $850 million. Francisco will pay $9 per share in cash. Blackline develops wireless worker safety monitoring products. The transaction is expected to close later this year. Shares of Levi Strauss are seeing a spike, about almost 11%. The jeans maker boosted its profit and revenue forecast for the full year, and first quarter sales and revenue also topped estimates. Levi is citing strong demand in all regions as it steers shoppers to its own stores and website. Now, separately, it announced its chief financial officer will be stepping down after more than a decade with the company. Shares of Shell are down after the energy giant said price volatility caused large swings in inventory values. The UK-based company also lowered its first quarter outlook for integrated gas production on the upside. Shell says weaker first quarter gas output and a hit to short-term liquidity would be offset partly by stronger oil trading. And looking at the markets, just a quick peek right now. They're coming a little bit back down to earth after the surge this morning. Still up, the TSX up by 1.13%, and south of the border, they are also well into the green, above 2% right now. The S&P 500, 2.1, Dow, 2.3, and the NASDAQ is up by 2.5%. Export Development Canada is a Crown corporation with an aim to boost trade development. Their representatives will soon be in Chile and Brazil to work on this same mission. Here to talk more about Canada's trade opportunities is Stuart Bergman, Chief Economist and Vice President at EDC. And Stuart, thanks very much for joining us.
Pleasure to be here.
What are we looking for when we head to South America? What are the opportunities we see down there for Canada?
Well, look, I think that for most economies, similar to the Canadian economies, let's call them, middle powers, it's become clear in the current global trade context that, we are vulnerable to these ongoing kind of U.S.-Chinese geoeconomic outbursts of competition. Canada, Latin America have really both chosen kind of a more pragmatic approach to safeguarding our economic interests. Prime Minister Carney's variable geometry, I think, is relevant equally for Canada as it is for many countries in Latin America who've realized that, in order to preserve our strategic autonomy and enhance our resilience, we've got to plug deeper into global value chains rather than actually pulling back from trade. And so I think equally for Canada and for many economies in the Latin American region, we're just looking to enhance our ties, to have closer ties going forward.
And do we have, what are our ties like now? Where do we stand with countries like those involved in Mercosur and Chile, Brazil, for example? Where do we stand with them right now?
Well, I mean, if we're talking Mercosur, we probably should start with Brazil. That is sort of the main economy in that bloc. Over the past 5 years, bilateral trade has grown 51% between Canada and Brazil. It's reached almost $15 billion last year. Just on the export side of things, Canada exported almost $3 billion worth of goods alone to Brazil last year. So clearly, it's a fast emerging market of interest for many Canadian businesses, exporters, and those that are looking to enhance their resilience by exporting to new countries.
But that's a pretty decent trade deficit, though. With how do we lower that, reduce that?
Well, I think it's mostly about looking at trade as sort of an integrated system rather than, the surplus versus deficit. It's an integrated system, right? Trade involves exports, yes, of goods and services, by the way, but also imports. And there is economic activity that's generated around imports as well. It also has to do with Canadian direct investment abroad, the sales of foreign affiliate companies. In fact, the sales of Canadian foreign affiliate companies now actually surpass our export sales. So to me, that's like a whole other shadow trade sector or export sector that exists out there. Many of those benefits accrue back home here in Canada in terms of taxation, jobs at head office, spending on research and development, links to new markets, technologies. So I think we need to look at trade as more of an integrated system rather than simply doing sort of the export-import counting, as it were.
And are these countries that we're talking to in Latin America, are they open to it as well?
Oh, absolutely. There's a huge amount of excitement around enhancing ties with Canada. We're getting a sense, as you mentioned, we're heading down to the region to visit Brazil, to visit Chile. Enormous amount of interest in what it is that Canada can bring to the market. And actually quite excited that discussions around a Canada-Mercosur free trade agreement seem to actually be going much quicker than many people had expected. You heard perhaps the minister last week mention that it's possible we even have an agreement by the fall, which would be quite astounding in terms of timing. And again, it's recognition on a part of all these middle powers that really enhancing our strategic autonomy is going to require further integration into global value chains and exploring markets which perhaps previously you just didn't explore because you were tied to these large markets, be it either the United States or, in the case of Latin America, the United States and China.
Now, have we moved relatively quickly with that deal? Because I'm just looking on the notes, the EU and their free trade agreement with South American countries just happened, and it took 25 years since the talks first started.
Yeah. Yeah, the hope is obviously it'll take less than that, but as I said, there are signs emerging that we could be ready to sign a deal as soon as October, November. So that's pretty quick. And again, it underscores the urgency around this issue for many countries like Canada, like Brazil. If you talk about Mercosur, you're talking about Argentina, Paraguay, Uruguay. Outside of that, countries like Chile. So it really does underscore the importance around kind of developing these new trade connections.
And it's always important to diversify it, not have your eggs in one basket, and the U.S. is our basket. But it's also harder to make money. There's more involved in trying to do deals with countries that are 4,000 miles away.
Sure. Yeah, absolutely. There's logistical issues to consider, and that we are actively working on enhancing our trade enabling infrastructure here in Canada. There are similar projects happening in Chile, as an example, and in fact, that's a good opportunity for Canadian companies to plug themselves into machinery and equipment relevant to the expansion of Chile's industrial infrastructure. There's also, costs associated with doing business in a new market, a bit of a different culture. Sometimes, in these cases, you're dealing with different languages. But that's exactly what agencies and outfits like EDC are here to help support. We really do pride ourselves on providing Canadian companies the support that they need to engage these new markets.
And are Canadian companies interested in these markets? Is the demand there?
Yeah, absolutely. In fact, our last biannual Trade Confidence Index, which is a survey that we conduct, as I say, twice a year, revealed that 15% of exporters, export-ready companies were actually looking to do business in the region over the next 2 years. And so that shows that there's fairly strong interest. Of course, there's still interest in business in our traditional markets. That's normal. But it's nice to see that, this interest in some of these new markets continues to increase. And that's been a steady increasing pace over the last number of surveys. So we're pretty happy to see that.
All right. And you mentioned about the $15 billion in total going between, that was Brazil and Canada. What's the potential for the region with Canada?
Well, Brazil is really kind of the linchpin, if you will, when you're talking about Mercosur. But you're looking at anywhere upwards of $20 billion.
Okay, we have to wrap it up there, Stuart. But thank you very much for joining us.
Thanks for having me.
Stuart Bergman is Chief Economist and Vice President of Export Development Canada. Well, coming up, markets are rallying today. Oil is sliding after the U.S. and Iran reached a 2-week ceasefire. More on how to navigate your portfolio amid the volatility when we come back. Markets have faced a challenging stretch amidst uncertainty over when the conflict in the Middle East will end. For more on how portfolio managers might be adjusting their strategy, we sat down with Shiraz Ahmad, CEO of Sartorial Wealth.
Depending on how you've been positioning your portfolios, it could be good or bad. So for a lot of the defensive or risk-off type securities, they're taking it on the chin a little bit today, and some of the risk-on are actually coming back.
Right. I mean, this is a situation which it's hard to discern momentum, isn't it? It's just so choppy.
Oh, very much so. So the volatility is through the roof, and that's to be expected in times of geopolitical risk.
Let's get to a stock that's an old faithful for many investors, Royal Bank of Canada. You like the look of this one right now.
Definitely, and we've been liking it for the last little bit. So over the past year, we've been in and out of it a few times. But that being said, we've actually taken a position recently, and we're a fan of RBC's kind of robust, banking opportunity. But it's not just pure banking. Their wealth management side of the business and capital markets just provide a really stable business model overall. And again, it's a household name here in Canada, so it's a name that everybody should be familiar with.
Let's put up a 10-year chart. You think one beauty here, or your argument is that this is a compounder. It doesn't just go up and down with the economy.
Typically, yes, but again, it's obviously tied to interest rates. So a lot of central bank policy will be impacting the performance of the stock. But overall, it has been healthy and has done quite well.
You can see it drifted for a while there. Well, obviously during COVID, everything dropped, but subsequently people were worried about mortgage renewals.
They were, and so the loan loss provisions on all the banks' balance sheets were increased, and RBC was one of the ones that did the same actions as well. So that being said, it looks as though that some of those fears have been subsided, frankly, and we're positive overall on the stock.
Another name you like is ENI, E in New York, a major player, a European player in the energy sector.
Yes, so this is, again, a bit of a energy sectoral play that we've done and in light of, frankly, recent volatility and momentum in the energy space. And obviously, it's coming off a little bit today. But that being said, for the past few weeks, energy has been one of the few beneficiaries of this ongoing geopolitical issue.
What about the company itself? I mean, the stock, obviously, it's had momentum over the past year. It's a double.
Absolutely. So it's had very strong positive momentum, and some of the screening that we're doing is looking at risk-adjusted return in both longer term and shorter term. And so it's screened very well, and it's a name that we liked and we wanted to add.
And Walmart, finally, a pretty obvious recession hedge. People look for lower prices in tough times.
Absolutely. And we're even seeing sort of the higher income segment of the population even looking towards Walmart as well. So they've been one of the bigger beneficiaries. Again, a very defensive stock that has done quite well in times of peril.
Let's try a 10-year chart for Walmart. I mean, one of the interesting things is they have made online work. They've been in this major battle with I think there's something up with our chart there, some kind of data glitch. But in any case, interesting that they have managed to take on Amazon in the online space.
They've done a remarkable job kind of pivoting their business to be able to take on sort of the needs of today. And that's part of the reason why we do like Walmart. Again, in my practice, we're primarily momentum driven, but we do fundamentals on the front end. And Walmart has screened quite well in basically any way you want to look at it.
And it's interesting as well, advertising. They get so many people visiting their site that in some ways, they're a media company. They make money from selling ads.
It's definitely part of it's a line item on their balance sheet, for example. But that being said, it's obviously not their core of their business, but we do like how they are positioned today. And because we're momentum, we may be in today, we may be out, tomorrow or next rebalance. But that being said, at the moment, we do like Walmart.
And that's an interesting phenomenon. We've heard that higher income people who might before have thought, wow, Walmart's not for me, they're going there.
Absolutely. And it could even be for something similar to like groceries, as a simple example. So you don't know which line item that is actually drawing them there. But the point is they're still seeing more and more of the higher income earners coming to Walmart.
That was Shiraz Ahmad, CEO of Sartorial Wealth. Fuel surcharges, rising food prices, and economic uncertainty are among the impacts the war in Iran is having on Canadians, with many bracing for a rocky spring and summer. CTV's Heather Wright has more.
English cheddars, French bries, provolone from Quebec. Good cheese in downtown Toronto stocks products from around the world and is among the many now grappling with the impacts of world events.
The first thing that you're going to notice is the price of shipping is going up. So that's definitely we're feeling the pinch on that.
Not only are shipping costs up, owner Luke Champion says so too are the prices of many cheeses he sells from both international and domestic suppliers. Champion is absorbing as much as he can, but worries about the unknown.
We're feeling it a little bit, but we're concerned about what's to come.
Businesses, households, grocers, and airlines are all feeling the impact of the war in Iran, now in its 6th week. The average price of regular gas in Canada is up 51 cents a litre since February 28th. Diesel has climbed an average of 74 cents a litre, while jet fuel has surged $1.05 a litre. And many companies have already begun passing these prices along to the consumer. Air Canada, WestJet, Porter, and Air Transat have all added various increases to their airfares or vacation packages, while Amazon will charge sellers a 3.5% fuel surcharge on deliveries beginning April 17th.
Energy, oil is embedded in everything that we have in the modern economy.
Andre Serra is an operations management professor at the University of Toronto and predicts high prices will be here for many months, even if the war ends soon.
I would say that the only certainty that we have is that it's going to take a long time until the prices, they really stabilize.
While inflation eased in February, experts are expecting a significant increase to the March numbers and say the longer this war lasts, the harder it is going to be for consumers. Heather Wright, CTV News, Toronto.
Coming up, Levi Strauss shares are jumping after the denim maker beat expectations, raised its outlook, and announced a major leadership change. We'll have more after the break. Levi Strauss is raising its full-year forecast after reporting stronger than expected quarterly results driven by solid demand and growth in its own stores and online sales. Our next guest says the company is doing a great job managing investor expectations. Let's dig into the story with Mary Ross Gilbert, senior analyst for equity research at Bloomberg Intelligence. And Mary, thank you very much for joining us today.
Thank you, Roger.
Okay, what's Levi doing right now? Is it the cutoff shorts are selling a lot? What's working for them?
Yeah, so I think it's really a whole host of things. First of all, Levi's has always been, sort of the leader in the next trend in denim. So, of course, baggy, wide leg, barrel leg, now cinch waist, which was dropped last year. So that's continuing to show strong demand, all those big baggy fits, but also their viral campaigns. So the latest one that dropped on Super Bowl Sunday, Behind Every Original, and that also featured a host of stars, including a Canadian basketball player. So all of these things are really working for the company and also growing non-denim. So head-to-toe denim is sort of the priority for the company, really sort of this whole lifestyle. But then also they had non-denim growth in bottoms for men that was also strong in the quarter. The other thing is in the wholesale business, that's kind of really where we saw the outperformance. They're actually gaining more floor space in some of these retailers. So for example, with Macy's, and it's featuring more like the merchandising that they have in their own DTCs, in their own direct-to-consumer stores. So they're basically taking that whole lifestyle aesthetic and bringing it into the wholesale channel, and it's really boosting sales there. So in wholesale was up 8%. Of course, direct-to-consumer really led the growth, up 10% in the quarter.
It's pretty impressive because, you're seeing other companies struggle in this sector, yet they seem to, and this, I'm always astounded because this is a 150-year-old company, 160-year-old company that makes blue jeans. And yet they managed to reinvent themselves.
Constantly. Yeah, you can go over the decades and you can see their campaigns from, prior periods that have also been viral. So Levi's has always really been at the center of culture. And what's really cool about the brand is that they can play across all demographics. So you also have, at the high end, you have people who are very wealthy and they wear Levi's. And then you also have people who shop at Walmart and they may be wearing the Signature by Levi's denim, for example, the more affordable line. Or they might save money and buy the original Levi's, the red tab. And of course, they've introduced the blue tab, which is their premium line. Those jeans sell for like $200 to $300. And they have like a lifestyle collection there. That business is very, very small, but growing. It was up 40%. So that's something that they're really going to scale next year in 2027. So they are rolling it out a little this year, but you're going to see it really scale in 2027. So they have permission to play and appeal across all demographics, across everywhere you are in terms of culture. So across music, sports, in TV. So for example, with the new Successful Love Story show, you saw Carolyn Bessette essentially wearing the 517 jean. And that also sparks excitement with the consumer.
And I just want to, we're almost out of time, but I want to ask, Harmeet Singh is leaving. He's the Chief Financial and Growth Officer. He's been there for more than a decade. Any concerns about that? Will that have an impact?
No, it's fabulous. I think he's just done an amazing job. It's going to be more of a transition for retirement. He's 62. So I think he's had an amazing career. Not to say that he'll stop because he has so much energy and I think he's brought so much to the brand, but there is going to be a transition period and he'll stay on as an advisor.
All right. And just one last question. We can sneak it in because we've got some time here. Everything was looking good and China even had
Yes,
been a weak
China.
spot, but they're turning that around.
Yes, they saw growth in China. Yes, that business they reset, and now we're starting to see that come back. And of course, overall, Asia, it was very strong. It was up 16% on the direct-to-consumer side in Asia, and about 60% of that business is direct-to-consumer and 40% wholesale. And they expect that balance to be maintained as they continue to grow in Asia.
Okay, we're going to have to wrap it up there, Mary, but thank you very much for joining us.
Thank you.
Mary Ross Gilbert is Senior Analyst for Equity Research at Bloomberg Intelligence. Let's take a look at the markets and see how they are doing on Bay Street and Wall Street. Lots of green everywhere. Those numbers are accurate. Look at the S&P 500 up 2.37%, the Dow 2.6%, NASDAQ 2.84%, closing in on 3%. All of this, of course, on the word of the two-week truce between the U.S. and Iran, although we're still hearing reports of rockets and missiles being fired, so we'll have to see what happens there. We'll have to see what happens by the end of the day. Here in Canada, let's take a look. TSX also, it's now moving up again. It had started to dip down below, up 1%. It's up about almost 1.5%. And one of those moving right now is Aritzia. I want to bring that up and talk about that for 1 second here. It is up more than 10% on its biggest intraday boost since October. It led its sector peers and observed sales from last year, and it's joining a bit of a rally in the retail names. Of course, we're just talking about Levi Strauss. It saw observed sales grow by 101.4% from last year, according to transactions data collected by Bloomberg Second Measures. So a big showing for them, and it is paying off for them. Okay, Know Your Options is back. Tune in today at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions at knowyouroptions@bnnbloomberg.ca. Market calls coming up next, and on the show we have Brian Madden. He's Chief Investment Officer at First Avenue Investment Counsel. That's it for us. Thanks for watching Morning Markets. We'll see you back here tomorrow.